Occidental Petroleum moving higher again today. Warren Buffett's Berkshire Hathaway buying more stock, bringing their stake to more than 23%. Rich Saperstein, you own Oxy. You got Chevron, Exxon, Marathon. You're overweight energy, but Oxy's the one I want you to hit first.
Well, obviously they have a concentration in shale in the U.S., so it makes them geopolitically less at risk. But the big feature here is an operating cash flow at current oil prices of over 30% and a free cash flow of over 25%. So they're going to be returning capital to shareholders. Buffett still has the preferred, and their debt right now is around $15 billion. So it's really going to go down to around roughly 1x leverage. So you have a very clean balance sheet, strong cash flow, and it's a typical Buffett name. I like the name.
Yeah. Jimmy, how close are you watching what's happening with oil prices? We hit a low of $65,
Yep.
a little north of that. We're at 68 now, and I ask you that because, you know, Mark Fisher gave me a call a little while ago and said, here's what I think's going on. Said everybody was short bonds and long oil, and that sort of has been blown out. Now no one wants to buy it with all the recession fears that are swirling around, that there's a buyer's strike and there's just no reason to jump in right at the moment.
So listen, it's a great point. Mark Fisher is obviously the GOAT. If you talk to him, I'd really like his opinion on this. You know, the administration, the presidential administration has said we're going to refill the SPR at prices of 67 to 72. Look where oil is, 67. I mean, they should be refilling the SPR. They sold these barrels of oil at $100. They could take a huge pat on the back, buy it back now at 67. They should be. And I mean, that's got to be the floor right here.
Maybe it will be. I mean, he said that oil should be bought, in his mind, bought at 65 and sold at 85.
Okay.
Now, when it got to 65, it was bought a bit, but it's going to be in a range.
Well, and the other aspect, okay, fine, that's a pretty wide range, you'll admit.
Yeah, it is a wide range.
I mean, you can make a lot of money in that range.
Yeah.
And by the way, China's reopening. It is. Europe's not done with its problems with energy. It's going to be buying fossil fuel. I just don't see the supply-demand imbalance globally as having gone away.
Brenda, how about you? You and Chevron, Cheniere?
We do, although we don't have an overweight in the group. You know, really, if you look at the performance from last year, it was tremendous. The stocks are cheap, but our view is, you know, in our view, you really need to have that incremental supply come online in order to drive these stocks higher and make a case for a significant move higher, and we just can't make that case right now. Fundamentals, I think, are still going to be healthy. Free cash flow generation is going to be positive. They're going to be paying down debt, returning cash to shareholders, all those good things. But it's just having that incremental move higher versus last year, in our mind, it's just hard to make a case.
Josh, you got both sides of this deal, right? You got Berkshire, right? You've been an investor in Berkshire Hathaway for a long time. NextEra and the oil and gas ETF, the IEO.
Yeah, look, I think one of the most interesting things that comes out of the last few years and all of the imbalances globally on trade, on raw materials, commodities, labor, the energy thing is really interesting. I think an entire generation spent 10 years being brainwashed into the idea that there was no money to be made, all the shale stuff was deflationary, and this sector was going to disappear because it didn't jive with the ESG agenda. Therefore, no institutional investors would ever own any of these stocks. That all changed on a dime last year. Best performing sector, still looking pretty good this year, although the commodity prices themselves are down. But I think energy and renewable energy will be an enduring investment theme, almost regardless of what happens in the economy in the near term. And so I remain interested in various areas here. NEE happens to be one of my favorite plays because it's also bundled with a utility. So you've got the dividend and the safety along with the upside in the renewable energy at scale types of projects.